Welcome to Breakout Investors. We are speaking today with the management of FLYHT, ticker FLYLF, and specifically Daniel Kim of the Investor Relations team. This call is being recorded on the 30th of May and will be distributed via the Breakout Investor channel on YouTube and via our podcasting network. Look for Breakout Investor content wherever you subscribe to podcasts. We're on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussions will be posted on the Breakout Investors collaboration app, available on the App Store and at that's alpha.breakoutinvestors.com. The application and much of the research content is free. So let's get started. Introducing Daniel Kim, and I've had a chance to speak with him before. He obviously represents FLYHT, which I think is just a really great opportunity. And I won't waste any more time and just pass directly over to him. Actually, just one moment. Anyone who is just listening for the first part of the call, if you don't mind putting yourselves on mute, and then we'll have a Q&A session thereafter. You can either post your questions directly in the chat, or you can ask them directly. So without further ado, Daniel.
Well, good morning. Thank you so much, Sam, for organizing this event. I'm very appreciative of the opportunity to present to you. Sam, if you wouldn't mind pulling up the presentation, please.
Yeah, no problem.
Okay, well, Sam's doing that. Just by way of quick introduction, before I came to FLYHT, I was 25 years in investment banking on Bay Street, technology analyst for my entire career. So I made a career out of finding undervalued small cap stories that were inefficiently priced in the market, where we saw big catalysts for change and huge potential upside. And FLYHT certainly fits that bill. So when I resigned from Bay Street back in 2018, I've been doing corporate development, and I've started work with FLYHT about a year ago. I've known the company for many years, but was fortunate enough to finally land a spot, and here we are today. I represent them as corporate development. Okay, so with regards to FLYHT, who we are and what we do in this airline industry is really to make a radical change. So our vision is to become a global force in innovative data solutions, and I'll explain what that means throughout the presentation. And our mission is to really take the data that comes off of a plane and turn it into what we call actionable intelligence. And what that means is we're able to take the data, of which there's gigabytes of data coming off an aircraft at any given time, and turn it into actions that will save the airlines money, help them run more efficiently, and ultimately save a lot of money and time. Next slide, please, Sam. So despite the fact that we are a relatively small cap company, we have been around for many decades. We were founded back in 1998, and we've been publicly listed now for roughly 20 years. We are headquartered in Calgary, Alberta, but we sell globally, primarily within Europe, the US, and Southeast Asia. Southeast Asia has been a huge market for us. That market has been slower to rebound than the rest of the world in terms of the airline recovery. However, we are starting to see some rays of light, where we most recently just announced a contract with Sichuan Airlines and Bahamian Airlines. So we are starting to see that that part of the market come back. The real key for us is, despite the fact that we are small, we have been one of the largest and most experienced providers of solutions to the aviation industry. We sell both hardware and software on a SaaS basis, or software as a service basis, which the market, I think, generally likes in terms of the investors like to see both the predictability and the growth of our SaaS revenue offering. At recent close, that share price is a little bit off. We're at 88 cents as of yesterday. So our market cap is closer to $34 million. Enterprise value is roughly $36 million. We do sell to most of the major airlines worldwide, and we'll be getting into that during the presentation. Can you flip forward, please, Sam? Quick snapshot of the company. Last 12-month revenues on the top left, you'll see there's $24 million. Analyst forecasts have that up modestly for this year. I think we potentially could see some upside. We'll see how it goes, depending on how our traction with our legacy product, the FLYHT 228, continues to deploy. If you recall, we had announced a record contract back in 2022. That was all delivered and completed by the end of Q4 2022. That was one of the primary reasons why you saw our licensing revenues spike up. That did not repeat, unfortunately, in Q1, but we'll see. That business tends to be relatively volatile and chunky quarter on quarter. So if we see another good contract in 2023, we could see nice upside, excuse me, in addition to our newer products, the FLYHT Edge, which we'll discuss later in the presentation. Backlog continues to be very healthy at $19 million. Pardon me, and that was not updated. This is as of Q4 2022. In fact, that is as of Q1 2023. And SaaS revenues represent almost 40% of our revenues, and that tends to bounce around depending on how much hardware we ship in any given quarter. But certainly that's an area of focus for the company, and as we deploy our new products, we hope our SaaS revenues will continue to climb to be a higher percentage of overall revenues. And we like the SaaS revenue market, obviously, not only for high predictability, but because of its higher gross margins, north of 60% in terms of the contribution to our profitability. And our pipe of opportunity was up roughly 10% sequentially to $77 million as of the last reported quarter. One of the keys that we get, one of the questions we get a lot from investors is what is happening with our new products and our supplemental type certificates. That's on the bottom right-hand quadrant of the graph there. We refer to those as STCs, and those are certificates that are required that you receive from the various agencies such as Transport Canada or the FAA, which allows you to install hardware onto aircraft. And we've been doing this for many, many years. We have well over 100 of these type certifications for our previous products, and we are now in the process of receiving those for some of our newer products. So we're hoping that we will get those in short order, and then we can start to deploy our FLYHT Edge, our new product, in earnest. We have lots of history within the industry. We've deployed over 4,000 of our FLYHT installations. That's our legacy product that takes data off of a plane through SATCOM communications. Can you take us to the next slide, please, Sam? 3 big catalysts for growth and why I think investors should really focus in on what they can expect to see going forward. And why is there a catalyst for change for this company? We've been around for decades, as I suggested. And if you look at our historical financials, they've improved nicely over the years, but not in any dramatic fashion. We think this potentially could change going forward. And there are 3 big keys. Number 1 is the obsolescence of 2G and 3G technologies. And we're now moving towards 5G, as I'm sure you've all seen in the press. This is no different in the aircraft industry as well. They need to take data off of the planes. When they're flying in the middle of the ocean, they use satellite. But when they're on continental ground or when they're at the gate, they use cellular technology. It's been well communicated that the large carriers in North America are turning off their 2G and 3G spectrums, primarily 3G recently. And they're all shifting now towards either LTE or 5G technologies. We are the first to launch a product with 5G compatibility, so we're hoping this first mover advantage will provide us a significant advantage. In the middle of the chart is the need for real-time data to support decision-making. What that means is if you could take the data off the plane, make intelligent decisions in real time, it provides enhanced capabilities for the aircraft to both save time, increase safety, and just really improve the overall operational efficiency of the aircraft, which is critical for airlines to save money. As you know, I mean, they've been recovering now since the pandemic for several years, and they're doing everything they can to improve their operational efficiency. And we believe we have solutions that can help them get there better than most others. The last would be on the far right, environmental imperatives. And what that means is there's a real move towards net zero. That's a 2050 goal for most airlines. And we have the capabilities to help airlines get there. Contrails is a big problem for airlines. and we can monitor the humidity on aircraft, which is a big determinant of aircraft creating those contrails. You'll see those white streaks when you see aircraft flying through the air. And we believe we can help them prevent that. And contrail avoidance is a huge deal. So we think weather could potentially be another big area of growth for us. Next slide, please. So the big thing for us is we have our legacy product is called AFIRS 228. And we are still selling that product. That was the product that we licensed, had a big licensing deal last year for roughly $7 million. And that business continues to progress nicely, and don't anticipate it's going away anytime soon. Complementing that particular product is our new product called the AFIRS Edge. This is our first new 5G product. It's a first to market. No other competitor in the industry that we're aware of has a 5G product. And we believe this product has a real opportunity to disrupt the market. Unlike the AFIRS 228, which is a SATCOM only product, AFIRS Edge is 5G. So you can use both products, both the AFIRS 228 when you require satellite connectivity, and the AFIRS Edge also now provides 5G connectivity. Of course, it's backwards compatible with 3G, 4G. The largest competitor in this space, their patents expired last year, so we believe we have a real opportunity to disrupt the market. As best we know, they do not have a 5G product on their template or their roadmap. So we are first to market, and hopefully we'll be there for some time. Of course, we do expect competition will eventually come into the space. I would never say we would be the only player, but first mover advantage we believe is critical as we build out our capabilities and increase our install base. As you can see there on the very bottom, we talked about the 3G sunset. This is all well publicized. AT&T, T-Mobile, and Verizon have all sunsetted their 3G. That means they're no longer supporting 3G. It's not turned off quite yet, but certainly airlines are now transitioning to 4G, LTE, and 5G pretty rapidly in the coming years. Next slide, please. What this slide here speaks to is the software capabilities of our device. So on the left, you'll see our AFIRS Edge physical hardware device. It looks like it's about the size of 3 or 4 laptops stacked together, and that slots right into the airline bay. It's got to be physically installed. But the real key for that is it grabs the data off of the aircraft. I guess the best way to think about it would be very similar to the type of data you would get off the black box. This device grabs that information and selectively sends what is relevant to the airline. And what we do with that information is what the balance of this graph is trying to show in terms of all the software capabilities, wireless quick access recorder, aircraft interface device. All this is trying to say is we take the data off of the aircraft and we can manage everything from not manage, but we can help the airlines see visibility into how the aircraft is burning fuel, how you're turning at the gates. All these types of things are critical to managing the operational efficiency of an airline. Next slide, please. In addition to the AFIRS Edge, we also have a weather sensing device. It's called the WVSS, or Water Vapor Sensing System, and that's the device you see on the very bottom left. It's that white flange that is externally mounted on the aircraft. So it takes real-time samples of air while the aircraft is flying, and that information is sent to meteorological organizations. This is a good market for us already. We've acquired some companies within the space. We are the only company that we are aware of that can provide this type of capability, and the aircraft providing this type of information in real time is absolutely critical for meteorological organizations worldwide. So we think we have a real opportunity to grow this business. The pictogram on the bottom right, all that is demonstrating is you take our sensor, you put it on the aircraft, the information is fed through our AFIRS 228 or our AFIRS Edge, and then is delivered by satellite or cellular ultimately to our end customers. We've often talked about the discussions we are having with UK Met. We believe that could be a nice piece of business for us. Still in discussion with them, and we'll see hopefully potential other weather agencies continue to show interest in our product. Next slide, please. This slide just talks about the net zero initiative. We talked about the contrail awareness. So this is a real push by the airlines to really manage and mitigate the type of impact that they are having on the environment. And our solution that we just talked about, the WVSS solution, is a very good solution for them to help them both in reporting and avoiding any type of contrails. Next slide, please. So if we look at the total addressable market of our company, it's 25,000 aircraft globally. So a significant opportunity. If we won, this is clearly illustrative. We don't provide guidance, but this is more illustrative in terms of what it would mean to us in dollars and cents. If we won 20% of that, we estimate that would be, pardon me, if we look at the total addressable market, it's $750 million in hardware and $3 billion in lifetime SaaS. That's the pie chart on the top right-hand chart graph there. If we won 20% of that, that would represent $150 million in hardware and $600 million in lifetime SaaS. And that's the bottom pie chart that you see on that graph. The total SaaS revenue opportunity for, if we assume a 20-year life for an aircraft, would be roughly $6,000 annually. So those are the assumptions that we have. That's just on the AFIRS Edge. If we now move into the weather market, there are 5 main meteorological agencies worldwide, and we estimate the rough dollars per agency would be $2 to $3 million per year, and we see potential line fit opportunity of roughly 78 aircraft per month per OEM. Next slide, please, just to give you a little bit more granularity on how we see the SaaS revenue opportunity potentially rolling out. Again, this is illustrative of what it could look like if we were to assume, make some big assumptions here. So if we were to assume from starting in 2024, going to 2028, that we did in fact capture 20% of that market by 2028, this is what a potential deployment would look like. If we shipped, for instance, on the far left of that graph, you see the number 500. So that means we ship 500 AFIRS 228 or AFIRS Edge units in 2024. That number grows to roughly 1,600 by 2028. Those are the orange numbers and the blue bars that you see on the bottom of that chart. What that would mean is a cumulative installs of 5,000 over the next 5 years. And what that means in terms of SaaS revenues is the 2 colored blue areas. So and you'll see 2 of them. You'll see on the far left at 2024, you'll see $3 million in SaaS revenues, and that grows to $30 million. That's on the low end of the range when we assume a lower dollar of SaaS per revenue of $6,000 per airframe. That growth, the gray area is the higher end of that chart, the higher end of that range. If we assume $8,400 in SaaS revenue per airframe, that would grow to $4.2 million per year in 2024. Growing to $42 million per year in 2028. So I know those are a lot of numbers. It's a bit confusing, but the point here is the real, a lot of investors focus on the actual SaaS, the actual hardware deployments, but that's only part of our business. The real benefit we believe that investors should focus on is the SaaS revenue growth, which we think by 2028 could range between 30 million to 42 million if we were to capture 20% of this market. And just to give a sense of the potential opportunity for FLYHT is obviously very meaningful with our products going forward. Next slide, please. Another way to slice our data and how we look at our numbers historically, obviously our licensing revenues tends to bounce around depending on the deployments that we have, and we talked about that blip in revenues, and you can see that on the very far right of this chart. In Q2 to Q4 of 2022, you'll see a spike up in the light blue lines. That is the licensing revenue that we announced, that $7 million contract that began delivering Q2, and it was completed in Q4 and was not repeated in Q1. You'll see the light blue line is a lot smaller. The other big key for this chart is the SaaS revenues. And the SaaS revenues are represented by the green bars. And you'll see from Q4 2018 to about Q1 of 2020, just before the pandemic. You'll see a nice progression, a linear progression upwards, and that's indicated by the red arrow during that time frame. And then the pandemic hit. Of course, there was a massive reset for the next several quarters, and we're now starting to see a pretty nice recovery. Airlines have been recovering quite consistently now, for primarily the North American airlines, and we're really waiting for the Asian airlines to recover as well. But the recovery certainly has been led by some of the big customers in North America, and that began in about Q3 of 2021 for us. And we're seeing now our SaaS revenues moving nicely upwards, as you can see from Q3 of 2021 to our most recent quarter, Q1 2023. And the percentage of revenues that SaaS represents is represented by the green line, which is roughly 51% in our most recent reported quarter. Just a lot of numbers there just to be aware of in terms of how you can look at our revenues and how our licensing and other revenues are shaking out quarter on quarter. Next slide, please. Another way to look at the data, this is more consolidated. On the left side, you'll see a bar chart here that breaks out our SaaS revenues with our other revenues clumped as one. So it's a little bit easier to read, and this is on an annual basis versus the previous chart, which is quarterly. And then moving on to Q1, that is just for the first quarter. The others are for the full year, so that's why the bars look significantly lower for right of 2022 data. So 2.4 million in SaaS revenue, 2.3 in other revenue. We just reported that 4.7 million in revenue in the first quarter. And you can see our gross margins for our SaaS most recent reported quarter for first quarter was 57%. Next slide, please. Lots of changes here in our management team. Of course, Ken Jacobs was appointed president and interim CEO after the passing of Bill Tempany. Alana Forbes, our chief financial officer, has been with the company for many years. And highlighted on the bottom right, are three individuals that were recently hired. Willie Cecil was hired back in 22, but more recently, Murray Skelton and Scott Chambers. They are all managing our sales efforts, and we think it's a pretty significant addition for us and a sea change for us. In fact, they came from one of our primary competitors. We were hoping that, as you know, they have tremendous legacy relationships with some of the larger airlines, primarily in North America, and that is really opening up the opportunity set for us, particularly as we are now launching our AFIRS Edge 5G product. On the left is a summary of our board of directors. Marion McMillan, she was just recently appointed our chairman. She had airline pilot and previously worked with Inmarsat and United Airlines. And more recently, at the very bottom left, we just announced two more additions to our board. Peter Large, he is a telecom executive, previously a senior VP at Trimble, and did previous research at Boeing and Inmarsat. Nancy Young, she's an environmental attorney and sustainability officer with Elder Fuels previously, and prior to that was a VP of Environmental Affairs at American Airlines. Next slide, please. So to summarize, why investors should care about FLYHT, in our opinion. We have a huge total addressable market. As we showed on the slide before, roughly $750 million in potential hardware sales, which would translate into $3 billion in SaaS revenues. We believe we're not just a one product company, it's both hardware and software, obviously, that we believe will drive a lot of the value. But it's not just with the data that we drive from our AFIRS units, both the 228 and the Edge. It's also on the weather side, the WVSS, which we believe would be roughly worth $2 to $3 million per year per agency. What's driving this change is the obsolescence of 3G, which is an industry-wide phenomenon. And we are the first to market with our 5G product, which we believe really puts us in an enviable position to capture significant market share. As we continue, if that does in fact happen and we grow our AFIRS Edge and AFIRS 228 deployments, that'll continue to drive our SaaS revenue. It's really the hardware is the driving force to deliver the hardware, software, excuse me, and we continue to push quite aggressively to enhance our software capabilities. So that's going to be a real growth area for the company going forward. And I highlighted previously the recent hires. We believe that now that we've built out our team with a lot of industry veterans, that we are in a tremendous position to capture significant market share. So in conclusion, if we look at the catalysts that we have going forward, both from an industry perspective, from the people we've hired, from the technology we have, we think we have a real opportunity here to accelerate our growth and jumpstart our evaluation. So with that, I mean, you can flip to the last slide if you like, Matt. That'll give you all of our contact information. We can open the line to questions, please.
Thank you so much, Daniel. That was a great presentation. Yes, had some updates since we last spoke as well, so those were great to see as well. I have a list of questions, but I will first just open the floor for anyone else who, if you have any questions, you're welcome to start. Otherwise, I will go ahead with the ones that I have and that I've also received from a few other people. Yeah, anyone else? Go ahead. I don't see any in the chat, so if you want to take yourself off mute, if anyone has something, go ahead.
Hi, can you hear me, Daniel? This is Chris Tuttle.
Yes, indeed, I can.
Yeah, I wanted to get a little more color on the Edge flight certificates or certificate. Just kind of understanding, like, when do you guys get like updates and status from these agencies? Like, do they give you comments back for we need additional information? Or I'm just not 100% clear on like the process. And I know that they've been sort of, in the pipeline and coming soon, but I'm just wondering, like, what kind of like information do you guys get to help you talk to customers about when, these products will be ready to install?
Yeah, that's a great question. So certainly at the beginning, there is some back and forth with the various agencies. But really, it's now in their hands, and you don't really hear much back from them. These are large organizations, as you can well imagine. So it's really just a question of timing for them to work through their backlog of things that they are working on before they get back to us. So the strategy here is, in terms of timing, we believe, we're hoping that we will receive our initial STC approvals probably from Transport Canada. They're a bit smaller and a little bit faster, so we think that's going to come first. And then we'll get through the other agencies, the FAA, through the balance of the year. And then from that, we're hoping that we can start to really ramp up our AFIRS Edge efforts with the airlines.
And when was the application like kind of finalized and put in? Just remind me when that happened.
The exact timing, I'm not entirely sure in terms of specific timing, but that was, I believe, largely done towards the end of 2022. And what we had just recently announced too is all the various certifications like environmental and whatnot. So we are certainly down that path and we're almost there.
Okay. All right. Thanks. I'll let, I know Sam's got a lot to ask too.
Thanks, Chris. If anyone else?
Yeah, hey Sam, it's John Cormier. I just have a couple quick questions. And Daniel, thanks for the time today. So in terms of airlines and their adoptions to this, are you in discussions with a lot of airlines? And, like, what do you think the sales lead time is? And what do you think the penetration rate would be for those airlines? I mean, I know you spoke about the 20%, but like, what do you think the ramp up would look like?
Yeah, the ramp up is tricky to say. We don't provide any forward-looking guidance, obviously. However, where we think we benefit is we have a legacy installed base of our AFIRS 228. So we are well known in the industry as being a very reputable supplier of hardware and software to the industry. So what we are now offering is a next generation hardware and software platform. We've hired now from our key competitor. So we believe this puts us in a tremendously good position to capture market share. It's anyone's guess what that market share will be and what that ramp up is going to be. However, what I would say is historically, we had been relegated really to a niche part of the market, only being a SATCOM player, because our key competitor had the patents that protected their ability to offload data from the aircraft using cellular data. That market has now opened up because their patents have expired. They have not launched a 5G product. We are the only player to have launched a 5G product so far that we're aware of. So if there's any indication of our strength of our position, the fact that we were able to attract 3 of the key salesmen from our key competitor to join our outfit shows you what they believe in terms of the opportunity set. So we are now in discussion with airlines that we've never had discussions with before, some of the majors in North America, as a result of both our product being first to market and as a result of these new gentlemen joining our outfit to really leverage the relationships that they have. So going forward, we think we have a huge opportunity now to displace the incumbent, and we'll see how that plays out over the coming years.
Thank you.
Thanks, John, or anyone else. If you have any more questions, then go ahead. Okay, I'll go ahead with some that I have, and then I'll open it up later as well if any questions come to anyone else. So the first question I had was just on kind of pricing of the hardware. I think on the Q1 call it said that the Edge is cheaper than your kind of legacy product, the 228. And I was just wondering if you can kind of elaborate a little bit on why you priced what seems to be better or kind of more capable product at a lower price point, and if you see that as kind of an advantage to kind of close sales easier, or what the thinking was behind that.
Yeah, that's a good question. So a couple of reasons for it. Number one, of course, as technology advances, as you all know, with any piece of hardware that you and I all own, prices come down as component costs come down. So we're enjoying the benefits of that. That's number one. Number two, we do want to be competitive if we look at the market dynamics of where our competitors price their product. We believe we are now pricing our product to be quite competitive and disruptive. The new AFIRS Edge unit will be coming in at a lower price point than our legacy product because the legacy product has SATCOM. So SATCOM modem is quite expensive. The AFIRS Edge is the first deployment, the first product that we have anyway is a cellular modem, so less expensive. But we could sell those 2 units together, or you can also add a satellite modem to the AFIRS Edge unit. So that would increase the average selling price to be more in line or even above the AFIRS 228. Good question, though.
Great, thanks. Mark, I think I saw you raise a hand. Was that by accident, or did you have a question? Maybe by accident. All right, well, just come on if you have a question. Okay.
Mark put a few things in the chat, I think, regarding.
Sorry, let me just check that. All right, yeah, I'll just ask those, so I'll read them out. As the industry upgrades to 5G compatible equipment, do you anticipate sacrificing margins in order to gain market penetration? Are you aware of any competitive? Oh, I'll just leave that first question there first.
Sacrificing margin, market penetration. I'm not entirely sure where he's coming from in terms of margins, sacrificing margins to gain market penetration. Suffice to say that the margin profile for our hardware is pretty stable, both on our legacy products and our new products. Where we believe, in fact, the reverse is going to happen is as SaaS revenues grows as a percentage of revenue, and we certainly want it to be higher than where it is today. And over the long term, the hope is to get it to become the majority of our revenues. Our overall margins should be significantly higher. And are you
Right.
aware of any competitors planning to come out with a 5G product? We are not aware at this moment, but it's hard for us to comment on what our competition is doing, but we have not seen or heard of anyone at this time. But certainly, I think over the course of time, it would be foolish of us to think that we would not have competition, but we would expect competition over the coming years, certainly. And would a 4G product still be viable? Absolutely, it would. So even though we are starting to see a transition, certain airports we in fact have moved fully to 5G, believe it or not, which is a bit of a surprise to me. So if you do, when you're at the gate, the only ability to offload data is using a 5G connection at certain airports, at least one that I've heard of, which is pretty unusual. But 4G is still around, and 4G topology will continue to be around for decades. So yes, 4G is still a viable product, but 5G provides, because the throughput of 5G is so much higher, it saves the airline the data costs pretty significantly. And if you are now starting to see, I don't know if this is a trend or not, I mean, it's hard to say with one airport, but if we do in fact see more and more airports moving towards a 5G only topology, because there's a direct line of sight from the gate to the aircraft, so it's pretty easy to do that. It does save the airlines pretty meaningful dollars in terms of data. So that could provide a nice advantage for us.
Great, thanks for those answers. The next question is about your legacy product, about the 228, and about your backlog. I think your contracted backlog is about 19 million, and the AFIRS 228, I think, is the majority part of that. I think that was said on the earnings call. And it also said on that call that the backlog would probably take about 1.5 to 2 years to clear out, if I heard that correctly, because that's the kind of typical time frame it takes to actually install the devices. And so if we were just focusing on just purely delivering the backlog, no new opportunities, no pipeline, then those $19 million delivered over 2 years equates to about 2.5 million in hardware sales each quarter. And I just wondered if I'm thinking about that right, because the past 2 year average for hardware sales is about 1.1 million. So I just wondered, are we seeing essentially a step change in hardware sales, or are you expecting perhaps not to deliver all of those within the next 2 years, or how should we think about that?
Yeah, that's a tougher analysis. I wouldn't look at backlog that way. Backlog just gives you the visibility for what you have for the next 2 years. As you said, assuming no new orders, but assuming no new orders would be overly punitive. The company receives orders almost on a daily basis, so backlog at any one given time is really just one moment in time when you see how much we have in terms of actual physical orders on hand that need to be delivered. I think the bigger number, the number that is more interesting to me and what investors should look at, is the pipe of opportunity. It was $70 million last quarter. It's now $77 million. And that includes both legacy products and new products. So that is more indicative of the type of opportunities, or at least the quantum of opportunities we are seeing in the end market. And certainly as that number has grown by 10% sequentially, that's indicative of the opportunities we are now seeing with the airlines, particularly with our new product.
And in terms of time frame for that pipeline, just so investors can kind of get a sense, obviously you need to wait. Well, the 228, you can start closing those deals and signing contracts, but the Edge wouldn't be for another year, and then it takes another 1 to 2 years. So probably the 70 million number, or 77 million, probably wouldn't be realized for another 2 to 3 years. Would that be a fair comment?
That would be fair. Our typical contracts are multi-year, and they would be multi-year deployments. That is correct. We would expect, if we receive our STC certificates in short order now, and we start to get the approvals from the airlines that we hope, The ramp up will happen beginning this year, but I would expect bigger volumes in the following years as our production capabilities with our partners ramps up, etc. It takes time for aircraft to go offline before you can install the hardware. There are multiple variants of the hardware that are coming out, so we would expect that ramp up to really start to happen in 2024 and beyond.
Brilliant, understood. The next question I had was about the total addressable market, and FLYHT, I think the slide said you're aiming for a 20% share. I was wondering if you can elaborate a little bit on that, because you already have installed hardware on 4,000 aircraft. I think that was said on a different slide. So is the 20% market share for the Edge in addition to the 4,000 legacy products already there, or how do we understand those numbers?
Right. So just to be clear, let me correct one thing you said there, Sam. You said our anticipated market share. This is purely illustrative of what our numbers would look like if we captured 20% market share. And this is, yes, just for the Edge and the and what that would mean in terms of hardware sales, specifically for the Edge, because that device sells for roughly $24,000. It also includes the AFIRS, which sells for $60,000. So it's a combination of those two capturing market share, and then the SaaS revenues that's driven off of that.
Great. The next question was of the total addressable market, about 25,000 aircraft. Do you have any idea, roughly speaking, how many have existing 3G, 4G, WQAR products installed? Because I would imagine that those would be easier parts of the market to convince to buy the Edge, just because I suppose if planes don't currently have any 3G, 4G, they may not really feel that there is a need for that network connectivity, and they may just prefer SATCOM-based solution. So I'm just kind of trying to get a sense of, roughly speaking, how much of the 25K market, by 25K, 25 aircraft market, already know the value of kind of having the network-based solutions.
That is a good question. I do not know. I'm embarrassed to say I don't know the exact breakdown. I've never seen a figure that breaks out the install base of SATCOM versus 2G, 3G on legacy airlines. The only data point I can offer you is our primary competitor owns the majority of this market. So I presume, therefore, that the majority of legacy airlines has a 2G, 3G product currently installed. And if you look at our AFIRS 228, it's a relatively small segment, obviously, versus our large competitor. So I presume, therefore, SATCOM would be a much smaller percentage of the overall market install base.
Yeah, very helpful. I'll just check in with everyone else to see if there's any other questions come up. Okay, I'll carry on. So the other question I had was, if the 228 is already installed on 4,000 aircraft, and your current SaaS revenues are in the region of, what were they again? I think they were about 2 million.
In the quarter.
Yes, in the quarter. I was just wondering, do you generate SaaS revenue from all of those planes, or if you can kind of give us a sense of, roughly speaking, how much revenue you generate per plane, or is there just kind of like a 50% of those planes that you're actually generating the SaaS revenues from? If you can kind of give us a bit more color around that.
Yeah, we don't specifically break out how many customers are paying us, but a good way to think about SaaS revenues, it's roughly $500 per month per airframe.
Okay, that makes sense. And I guess since your SaaS revenues are still behind your pre-pandemic levels, you expect to see kind of the legacy, even without further installs, the legacy products, total SaaS revenue generated to continue to recover, as well as any additional sales you make. Is that fair?
Yeah, so if you look at the bulk of our SaaS growth historically prior to the pandemic came from Asian-based airlines, and they have been slower to recover. That's why the SaaS revenues took a big dip during the pandemic, and we're now starting to see a recovery in the SaaS revenues.
Great. All right, so the next couple of questions I had was about the weather opportunities. And I was wondering what the margins look like on the weather opportunities. I know you give us breakdown by category, and weather kind of falls under SaaS revenues by the categories you use. I was just wondering if you did close, quite a few more weather opportunities, would that kind of decrease the margins, or would they stay about the same? As obviously it's combined with the kind of larger edge and 228 opportunities. So I was just wondering what the effect of weather is in there.
Yeah, that's a good question. We've never specifically broken out our weather hardware gross margins, but I think you can reasonably assume that hardware is not going to be terribly different in terms of the margin profile for any of our products. And then the software, the SaaS opportunity is obviously the same thing. It's going to be higher margin and recurring revenue where we see the bigger opportunity. So in terms of how that's going to impact the overall blend, I think it's already baked into some of the numbers that we had presented already.
Understood. And could you explain a little bit about how the weather opportunity works in terms of who buys the products or the devices, the sensors to put on the planes? Who owns the data, if anyone, whether it's kind of the airlines or whether it's the Met offices, or whether you do and you kind of have some kind of licensing deal? Could you explain a little bit about how that all functions? And I suppose just on top of that, if there's any chance there could be kind of friction between the two parties in terms of the airlines and the weather companies, if that's all been relatively smooth and would continue to be smooth between the two parties.
Yeah, in terms of the latter part of the question, absolutely is a requirement. There has been, because of the pandemic, there have been fewer flights, obviously, and there's been a much smaller data set, and the weather agencies need this data set from the airlines to provide real-time data. So there is a real need there from the weather agencies. So they are working hand in glove with the airlines to ensure that they can capture this data. So how this works is the airlines acquire the hardware, and that, if you recall that previous slide with the external white flange that's mounted on the outside of a plane, that captures incoming air in real time while the aircraft is flying. And that information is then used by the airlines for their various requirements, as I talked about, for instance, contrail avoidance. And that's generated typically by humidity. So if an airline can determine where the air has higher humidity, it can then alert other aircraft to avoid certain areas, to avoid contrails. So that's an example of what they would do. But it's also capturing all kinds of other information. And in fact, the WVSS system is a water vapor sensing system, but the diode can be adjusted, and we hope over the future that we'll see other modalities captured as well from other types of gases that can be captured in the atmosphere to provide other types of information. So that information then becomes critical to weather agencies as well. So over the course of time, We're hoping that as environmental pressures are moving towards, are forcing airlines to have more a net zero application. So that what that means is they just need to know what their carbon footprint is, and weather agencies require real-time information, and airlines are a big source of that. So they really need to work hand in glove, and we're not aware of anyone else that is providing this type of hardware at the moment.
Great. One quick question on what's essentially a smaller revenue segment, which doesn't get mentioned very much, but your technical services obviously got a big boost when you took on CrossConsense, or when you acquired CrossConsense. Could you just kind of give a quick sense of whether you expect that stream to grow, to remain about steady? Yeah, any color there?
We don't really provide guidance in terms of how our segmented revenue is anticipated to grow over the course of time. That's a business that's relatively stable, as you can imagine. It's based on hours, so we would expect that unit to grow with the market. Would be, I think, the best way to quantify it. So don't expect any huge leaps and bounds. The leverage obviously is going to be coming from all the other things that we've discussed.
Yeah, understood.
Hey, Sam, it's John. I have a couple of quick questions. And so, Daniel, I know you've alluded to a number of these questions, but it appears as though you've got a really great opportunity on tap right now, with a lot of opportunities to win. My question is, as you continue to pursue these opportunities, what are the risk factors we should think of in terms of impediments, headwinds, in terms of, penetrating the market? I mean, there was a question that was asked earlier about some margin compression potentially to penetrate the market, but as potential entrants come into the market, how should we think about that? And my second question is, in terms of the time to land a customer, the cost associated with that, can you speak a little bit about what the switching costs would be if there would be another competitor in the market? Like how quickly could they switch, and what would the switching costs be, and what kind of customer acquisition costs we should be thinking about as well? Thanks.
Okay, let's break that down. So the first question is the competitive front and how we would capture market share, I believe. And yeah, I mean, it's going to be a competitive market. There's no doubt about it. The advantage for FLYHT is we are first to market, and we believe that provides a huge advantage for us. The strategy is to win as many customers as we can, as quickly as possible, build that install base, because once you are into an airline in a multi-year contract, then it's pretty hard to get displaced. And the reason why we think that this could happen is, as with external factors of 3G sunsetting, airlines are now being forced to look at the next technology, and they are being forced to upgrade their boxes, so to speak. And if they're getting rid of their 3G box, it's now an open socket. Do you stick with a competitor who has a legacy solution and with 4G technology, and that box is going to reside in the plane for the next 20 years? Is that a good solution? Not for me to answer, but some airlines might say yes, some might, hopefully most will say no. Or would you rather go with a technology that comes from an incumbent that's been around for 24 years, 25 years, that has the new 5G box, and you have the capabilities that will work with you for the next 20 years? So we think that provides a significant advantage for us to be able to capture market share. In terms of customer acquisition cost, we don't look at it that way. Typically that's something we would think of in more of a digital domain, how much you would spend online to capture a customer. These are airlines we work with directly with our small sales team. We just hired 3. We now have a full complement. So we go directly to the airlines to sell to them. So I guess if you want to look at it from that perspective, you can look at their salaries and figure out how many airlines that we would close in any given quarter. That would give you your customer acquisition cost, but certainly that's not something we publish. But the reason why we have done that and why we've hired 3 additional salesmen is historically we've sold to the smaller airlines in North America and Asia. We're hoping now with the opening up of this socket and the termination of their IP, that this opens up now the landscape for us to really gain significant market share in this marketplace. And that's why we invested in these new salesmen. Hope that answers your question.
It does. Thank you.
Yeah, we're going to have to wrap up very soon. So if anyone has any last burning question, go ahead. All right, I'll just pose one quick question then, and that is, you're obviously not consistently net profitable at the moment, and I guess just do you anticipate any requirement in the near future to raise capital through any means? I know you have a cash pile, but I just wanted to put the question out there for the other investors.
So that's a great question. So at the moment, operationally, as you saw from the last quarter, we did generate cash, last couple of quarters, in fact. So from an operations perspective, we're absolutely fine, and we have no plans to go to the market at the moment.
Great, thank you. Well, there's a message. Yeah, from Mark Gomes. How do/will 4G competitors compete with your 5G offering, specifically on price? And we'll make that the last question, then we'll wrap up.
Oh, absolutely, yeah. Airlines could easily upgrade their 3G box to a 4G box, certainly, and that could be their decision. And in fact, going back to an earlier question, that could be a risk profile. Some airlines will choose to just upgrade to a 4G box, and that's something that they certainly can do.
I think what Mark may be asking is just kind of how the 4G product is priced compared to your 5G product.
Yeah, I can't comment on where our competitors are pricing their new products, but our 5G product offering is very competitively priced. And we believe, based on the value proposition of it being 5G, of course, and the software that we have in terms of the capabilities it can provide for the airlines, it's a very strong value proposition.
Brilliant. We'll wrap up there. Thank you so much, Daniel, for the time. It's been extremely interesting, helpful. I personally really, I love this opportunity, and I wanted to share it with the community. So I hope the rest of the community enjoyed it. And yeah, please contact Daniel if you have any further questions.
Well, thank you very much. Yeah, thank you for your time. Great questions, and you see my coordinates there below. Feel free to reach out anytime, and I'd be happy to answer any other follow-up questions. So thank you very much.
Yeah, Daniel and Sam, just want to add my thanks. That was really helpful. Appreciate you.
Terrific. Thank you very much.
Okay. Thank you, everyone.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers, not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.